I'm really going to try and remember that this is being recorded. be on my best behaviour. Good. I just dropped a question in the chat box. If everyone has a minute to answer, it would just really help me if people could tell me their main job role or function. So if I know that people are mainly performers or mainly producers, or if I could just understand what your main kind of trade is, obviously I'll try and target my remarks specifically to you. So Izzy, I promised you 3 jokes in this session, did I not?
You did.
Here comes one. A woman goes to the doctor and the doctor says, I've got bad news for you. You've only got 6 months to live. And the woman says, oh my God, what can I do about that? The doctor says, well, I would advise you to marry an accountant. And the woman says, well, if I do, will I live longer than 6 months? And the doctor says, no, but it will feel like longer than 6 months. Okay, not really a huge bellows of laughter, but then that's because people are on mute, right? Yeah.
That's exactly right. And that was really great. Thank you, Jon.
Very good. You're welcome. There are going to be 2 more, Liz. There are going to be 2 more. So, you know, stand by. Good. So we're kicking off with a couple of polls, if we can make them work. So here comes one. I have filed my 2021 tax return. I hope you can see that now. Just yes or no to that. Thanks very much, everyone, for all the votes coming in. A couple of people still to go. Well, 3 people managed to vote, so we'll stop there. Others may well be doing something else. So there we go. Approximately 2/3 of the, no, well, exactly 2/3 of the people who voted, but maybe that extrapolates out to 2/3 of the people on the call have and 1/3 haven't. So we're doing slightly better than the UK in general. So far in the whole of the UK, about 80 to 85% of self-assessment taxpayers have filed their 2021 returns. Izzy correctly said when we started that there is no fine for filing late this year up to the 28th of February. And there's also no fine for paying late. If you haven't paid yet, you won't be fined if you pay up to the 31st of March, although there's a slight sting in the tail on that because there is interest racking up already actually from the 1st of February, but it is a tiny rate of interest. It's only, well, the best way to think of it is it's about £2 per £1,000 that you owe per month. So if you had a tax bill of £1,000 and you paid at the end of February, then your interest bill would only be £2. Good, so I'm going to crack on with my slides, which are all sort of true or falses. We can all have a vote in a poll about all of them, which will be enormous fun. And then, Izzy, what do we want to do about questions? Would we like people to post their questions in the chat or
yeah, I've suggested people pop them in the chat, just so we don't miss any. But we can totally see how that goes as well. And if anyone's got like a burning question they want to ask, I want to shout it out, I'm sure that will be fine.
Fantastic. And I can see we've got a couple of producers, we've got a couple of freelance artists, a writer. Fantastic. Very good, very good. Okay, so a general creative bunch. So thank you, Maria. I see what you have posted there as well. Fantastic. And actually, Maria, I've got a question for you, in fact, Maria, because of what you've written. When you do your self-assessment tax return, Maria, do you treat your business, do you declare that you have 2 businesses? Do you treat them as separate businesses, or do you just treat them as one business? I think it would be open to you to do either, actually, but this is a question that comes up quite often for people who are in that position. So Maria does those as one. There's clearly a very strong connection between the 2. They're not really separate. She'll be doing lots of the same things as a tutor, regardless of what subject she's tutoring in. So it's absolutely open to her to do that as one trade. gets a little bit more difficult. Obviously, during the pandemic, this came up much more often than before because people started doing completely different things. And if you are doing kind of completely different things, so of course, we'll all know performers who are electricians as their side hustle, or gardeners, or they're doing whatever else they're doing, which is completely different from the creative industries. There's a case then for treating that as two trades. That can get a little bit complicated. If anyone wants to know more about that, I'm sure you'll ask away. Very good, here we go. So my first true or false is there is nothing you need to do tax-wise or legal-wise when you start in self-employment. So here comes a true or false there. So is that true or false? There is nothing you need to do tax-wise or legal-wise when you start your self-employment. So either everyone's thinking or no one's listening. Oh, we've got three votes. I don't think you can vote, can you, Izzy? So you don't count here.
No, I don't think I count.
In this sense, you count in every other sense. Oh, you laughed. Can I have that as my second joke?
Yeah, go for it.
I'm afraid the one person who answered true to this is wrong. It's false. There is something you need to do tax-wise, legal-wise when you start your self-employment, but there is really only one thing, which is to tell HMRC that you have started. You actually don't have to if you are earning less than £1,000 in income from whatever it is, whatever trade or side hustle it is. You're okay. You're okay not to, but you must inform them, fill in, you can either ring them up or you can fill in a form and they send you your UTR, your 10-digit tax reference, and you do need to do that once you start. Here's number 2. You should not think about your pension until you are at least 40 years old. True or false? You can vote on this one now. It's like a bit more of a... I have
realised as well, if you've got an older version of Zoom, you may not be able to see the polls. So if a poll hasn't popped up in front of you, feel free to put it in the chat.
Very good. Yeah, we'll keep half an eye on that. I think everyone's got that one right. You should think about your pension really as early as you can. You can even get pension products for children. In fact, but by the time you are embarked on the world of work, even if it's only in your early 20s, you should definitely be contributing to a pension. Now, if you're in any kind of employment, it's possible that you qualify for workplace pension now. So they will be both contributing for you and also asking you if you want to contribute some of your earnings. But even if you don't qualify, so for example, if people are working part-time or 0 hours, they might not be earning enough to qualify for a workplace pension. But you can still just go and start one. Just go on the high street or online, just any big household name, any of the high street banks or Virgin Money or anyone like that. These people will all sell you a pension that you can contribute to at your own level. It doesn't need to be very much. But it's really worthwhile for two main reasons. Firstly, because you are saving into your pension tax-free, so it's really the only way of earning income tax-free that you would otherwise pay income tax on is to put it into your pension. And the other thing to bear in mind is that obviously, especially if you're relatively young, then that money's going to sit there earning interest for a very long time until you use it. So even if rates of interest are very low, as they are at the moment, you're talking about such a long time if you get going early that you really rack it up. So I pointed out to some people in their 20s just the other week that they were new employees at one of my clients, and if they went into the pension scheme, they're not people who are earning much. But if they went into the pension scheme from the off and they put in the maximum contribution that they could put in, which I think was 5%, then even with quite modest amounts off their pay slip, 20, 30, 40 pounds. These people who are quite potentially, if they keep that going, looking at a pension fund when they retire of £500,000 or upwards in their fund. So it's really, really something that you must think about. Here is number 3, my favorite one of all. Most people can submit their own tax return without paying an accountant. True or false? What do you think? That poll's up now. This will get you thinking. Don't be polite, by the way. If you think it's true, say so. Okay, so putting me out of business here, we've got 4 people saying that they think it's true, and just 1, who I hope is my client, saying that that it's false. I always like to say the same thing about this. Look, I actually agree with the people who say this is true. I think that most people can do this. Most people working in the creative industries can. And I always say, really, there are 3 circumstances in which you shouldn't. There are 3 circumstances in which you really should think about engaging me or somebody like me. There's lots of good people to do your tax return. The first circumstance is if you just don't like doing it, or if you're in any way scared of or apprehensive about it, and some people are, and that's absolutely fine, and those people should get an accountant. The second group of people who should are the people who are earning more than £50,000 in profit. So just think about, again, especially if you're early in your career, that might still be some way away, and you might not be wanting to think about that yet. But once you do get there, then I really would recommend getting an accountant, because the complexities rack up. You go from a 20% basic rate to a 40% higher rate on everything you're earning over £50,000, so the stakes are higher, and it's well worth it. And then I would say the third circumstance, which it's very difficult to get right on your own, is if you have any kind of overseas income. If you've worked overseas, or if you are a dual citizen, or you've been tax resident in another jurisdiction for part of the year, it's very, very difficult to get that right on your own tax return. It's very technical, and those people should probably have an accountant. The only other thing I would say in connection with this is, if you are in the creative industries, you really should get a creative industry specialist. I would say that, wouldn't I? But I really think that's true. I've seen so many instances of people who've gone to high street accountants or even some big firms, and it all goes wrong because it is a very specialized field. I wouldn't do a tax return for a deep sea diver. And by the same token, people on the high street really shouldn't be doing one for people in the creative industries. Number 4, the easiest way to do your tax return is from memory. True or false? Bit of an easy one here. Bit of an easy one. I think we'll get some quick answers to this. So I think some people are treating this question with the contempt it deserves and not bothering. Well done. Yeah, obviously this is false. You must keep some proper records. Let's pick on you, Izzy, because you're there. I can see you. How do you keep your records? Because you're quite good, actually. Don't you keep quite a detailed spreadsheet, don't you?
I am. I'm quite type A, so it's all a spreadsheet for me. I log all my invoices, and I'd love to say I do it year round, but I don't. I do it probably about a week before I send it to you. I go through all my receipts and stuff like my Amazon orders for any research books I've ordered, and my inbox to look at any theatre tickets I've had during the year, all the things I can expense, basically. I just do like a big deep dive through.
Okay, so it's not bad at all. Quite a high. You're giving yourself a harder time than you need to, really, by doing that. So obviously you could make your life easier if you did it just slightly more regularly as you go along, or once a week, or something like that. It's a real stitch in time saves job. Is anybody using? Please turn to the chat box. Anyone? Is anyone using an app to keep their records? And is anyone already using an app to do that? There are various ones out there. It'd be interesting to know if anyone has already dived in there and started using one.
Adele says no app, just a spreadsheet.
Billy's used Dext. Yeah, that's quite. Dext was quite quick out there and has quite a few people. Okay, so I mean, you will find a number of apps out there. I think actually, the way to think about this is to skip forward in time a bit and then come back to where we are. So you might have heard of a government initiative called Making Tax Digital. Making Tax Digital is going to change lots of these things from 2 years' time from now, from April 2024. So from the tax year 2024-2025 onwards, everyone who earns more than £10,000 in profit is going to have to keep their records digitally. And your tax return won't be done in the way it is now, where either you or an accountant upload figures that you type in to HMRC. Rather, HMRC will want to be connected directly to the app in which you're keeping your records. So everyone is going to have to do this. And at the moment, there's a big scramble in the app market for the big players, the big providers, to try and start capturing people. If you haven't heard of any of this yet, it's because they haven't really got going with their marketing yet, because it's too early. But in the next year to 18 months, this is all coming your way. So some of the apps that you might have heard of, like Free Agent or QuickBooks or Xero, which is spelled with an X, Xero, all these providers are already launching apps that are targeted at small traders, all in around about the £5 to £10 per month space. Sans Drama, who are a great group, a not-for-profit group who offer free advice to actors for tax and financial matters. They've made a nice app as well. We've got a version of that. That's at a slightly cheaper price point at about £3 a month. So this is all going to start, and if you are VAT registered, you already have to be doing this from April of this year. If you're not VAT registered, you've got a bit longer, but you are going to have to do it from 2 years' time. So in a way, the sooner the better. Something obviously that everyone wants to know is whether HMRC, since they are insisting, or the government is insisting that everybody does this, well, does that mean they're going to offer a free app so that people don't have to pay another £5 a month or whatever it may be for an app? And the answer to that is they haven't said yet. We'll just have to wait and see. There is no advantage to filing your tax return early. True or false? This is slightly more of a brain teaser. No advantage to filing your tax return early. I think somebody might have changed their mind. That was exciting. Okay, we've split the room down the middle as far as it's possible to, with 5 people voting. Is he true or false? There's no advantage to filing your tax return.
I actually don't know the answer to this. I don't.
I think this is false. I think there is an advantage in this. I think the advantage is that you know where you are, basically. So if you answered true, you might have answered true because you think that if you file early, you have to pay early, and that's not true. So if you had, as we all know, the deadline for the 2021 tax return was initially 31st of January, then it got moved back to the 28th of February. You could have filed as early as the 6th of April last year. You'd have had to have been very quick off the mark to do it on the 6th of April, but you could have filed in April or May last year, but you would still not have had to pay any of that tax until now. So it's not true that if you file early, you have to pay early. And I would say that this is false, that there really is an advantage to filing early because at least you know where you are. Okay, here we go. Now, this is more of a brain teaser. When you pay your tax bill in arrears, i.e. for the previous year, you also pay half the current year on account if your tax bill was greater than £1,000. True or false? When you pay in arrears, You also pay half the current year on account if your tax bill is more than 1K. Couple more people. Oh, there's one more person to vote. We've split the room down the middle again, and this time the 3 people who said that that's true are correct. So that sentence there offers precisely the definition of when you get caught for a payment on account. Now, you might not have had to grapple with this before if your tax bill has always been under £1,000. You have a personal allowance, a free personal allowance of, well, this year it's £12,570. Last year it was £12,500. So that's the amount that you can earn without paying tax on it at all. Once you go above that, you're paying 20% tax up to £50,000, then you're paying 40% beyond that. So if you earned, let's say, for the sake of argument, about £20,000, that means £20,000 profit, that's your income less your expenses, then you're getting taxed on about £7,500 of profit at 20%. So your tax bill is about £100. So you would have gone over that £1,000 threshold, and therefore £1,500 tax fee again on with that first payment on the 31st of January, and the other £750 on the 31st of July. So payment on account can be quite a difficult area. It rests obviously on the assumption that you're earning about the same from year to year. And of course, in reality, lots of people are not earning about the same from year to year. So you have to be quite careful. You out really in 2 ways in which you have a big jump. So this quite often happens for early career creative people. They're rocking along at a low wage, 10, 12, 15,000 pounds. Either they don't have a tax bill at all, or they have a very small one. And then along comes a year when, thank goodness, they do a bit better. Now they're up to 20 or 25,000, and suddenly they're over that threshold, and they find that they have to pay not only the tax they were expecting to pay, but also half a year on account. So quite important to look out for a moment when you're going to have a big jump, and make sure that you put away a bit more in the few months before that. The other way in which payment on account sometimes catches people out is the other way around. So you can claim to reduce your payment on account if you believe that the year that you're having it now is worse than the year that you had before. So you can say to them, well, I shouldn't pay you my payment on account because I'm actually not going to make as much this year as I did last year in the year which you're calculating it on. And so in those circumstances, that's fine, but you've got to look out, because if you then do well in the year that you have claimed to reduce your payment on account, they will try and hit you for interest on the amount that you should have paid. We have a picture of a doctor there because I often find that people can suddenly become very sick when they realize that they are liable for a payment on account that they didn't realize they were. Yeah, that's the second joke. Sorry, there it was. Blink and you miss it. Okay, here we go. Let's get into expenses. This is actors. I know that not everyone on the call is an actor, so only some people are, but even if you're not an actor, have a guess at this one. Actors can usually deduct the cost of gym membership on their tax return. So if you're an actor, is your gym membership an allowable expense? One more person to vote if we've still got them. But I might have, oh, thank you very much, they're there, yeah, I might have croaked them into submission. 5 people said that this is true, and I'm afraid that 5 people are wrong about this. Actors cannot usually deduct the cost of gym membership on their tax return. So you can deduct expenses which are, well, by the letter of the law, wholly, necessarily, and exclusively incurred in connection with your business. But sometimes that's very straightforward. If you have if you take a train journey in order to go to a performance or to go to an audition or to go to a meeting, obviously you have incurred that expense wholly and exclusively for your business. You wouldn't have gone on that trip if it weren't for your business. And then at the other extreme, if you it's easy to think of expenses which are absolutely nothing to do with your business. And then, of course, there's a big grey area in the middle, right? Which we can all have a nice fight about with HMRC. Gym membership is something you've got to be very careful about in relation to actors. So I would say that there's an obvious distinction here between actors and dancers. So for dancers, I would always allow the gym membership because it's obvious that every dancer or almost every dancer or somebody who's involved in physical theatre to a great extent, it's obvious for those people that gym membership and gym activities are an essential part of their business, right? But that's not that obvious for all actors, right? It'd be perfectly possible to conduct some kinds of acting without having to be physically fit or supple or to have big muscles or a great heart rate or whatever else you go to the gym for. And so that's more complicated. Yeah, I'm going to leave that one there. People are free to come back to me with other questions about that, and I'm sure people may well have other questions about other kinds of expenses, that can often be a lively discussion in these kinds of sessions. You do not need to consider any matters relating to childcare costs, working tax credit, or child benefit when you compile your tax return. You do not need to consider any of these things when you compile your tax return, true or false. I think we can knock this one off quite quickly and get to questions. Everyone has got this right. It's false. You do need to consider all these things. You can't have childcare costs as a deduction if you're self-employed, so they aren't allowable costs, right? But there is, of course, a certain amount of tax-free childcare available, provided you earn less than £100,000 in the year. Working tax credit is slightly the odd one out here in the sense that it does not have any bearing on your tax return, so you don't need to declare your working tax credit or your universal credit in your tax return. And then child benefits is important once you or a partner who is also responsible for the child or a partner that you live with, might be different people obviously, if any of those three people goes over £50,000, then there starts to be a clawback of child benefit, and if any of those three people goes over £60,000, there is no more child benefit. So you do need to consider that carefully. True or false, there are very significant tax advantages to someone who has their own business if they form a limited company instead of being a self-employed freelancer. True or false? Very significant tax advantages if you do that. Couple more people to vote. One more person who's not sure. Oh, we've got more people now.
We've had people trickling in. So just to say for those who's come in as well, if you can't see a little kind of polls, quizzes pop up in front of you, it might be that you're on an old version of Zoom. So you can always use the chat to say true or false as well.
We're split down the middle here. I actually think that this is false, because I think that the tax advantages are not all that significant. So in terms of income tax, a person who has a limited company compared to a person who's a self-employed freelancer, they will probably pay the same amount in tax, broadly speaking. The person with the limited company might pay a bit less, but the administrative burden and costs of running a limited company are far greater than the cost of being a self-employed freelancer. So just to give you a quick idea, and also to do a little commercial break, my firm charges 199 plus VAT, so 200 quid for the self-assessment tax return, but we charge 999, so £1,000, 5 times more to look after the affairs of a limited company, basically because there's 5 times as much stuff to do. So even though you might make have make a little bit back on the tax, you've got a much higher administrative burden. It is true that there are other advantages depending on your circumstances. I mean, we were talking about pensions before, and it is true that it's much more tax efficient to run a pension through a limited company. You know, even better. I said it was great for self-employed people, and that's right. It's even better for people who run a limited company.
It's absolute joke, isn't there? I'm just on the tax workshop for half an hour just to see if I can get any.
Grace, pop yourself on mute. Thank you.
Oh, sorry, I was just telling Tom that I was on the tax workshop.
It's okay. It's always nice to hear from you.
Hello.
Hello. Where was I? Yeah, okay. Anyway, there we go. I think with it. I'm just going to pick up, because I've noticed it, Maria's question in the chat box. She said, what about dance lessons as part of acting training? Could that be an expense? Yes, the answer to that is yes. So really any kind of training or CPD that's to do with your business, to do with your trade, is an allowable expense. If it's what's not an allowable expense is something that's not related to your trade. So some, you know, training that's really not related to your trade is a completely different thing. Now, I understand that dancing and acting are different things, of course they are, but I would say that they're so closely related, and there are so many circumstances in which actors have to dance and in which an actor might want to improve their dance skills, that's quite an obvious link. And so I would say yes, that would be completely allowable. My last true or false, and then we'll just go to questions. A tax inspection of your records is quite likely at some stage in your career. True or false? A tax inspection by HMRC. Any other offers? Anyone else want to get a vote in lastly? Yeah, this is definitely false. So well done to the one person who said that. The other 4 of you are unnecessarily scared of this. It's really unlikely, and it's also getting less likely. The reason it's getting less likely is that basically HMRC have fewer people and more computers than they used to, more algorithms. And what the algorithms are doing is they're obviously looking for anomalies or they're looking for things which are obviously dodgy. And they tend not to find these things in the creative industries because, as we all know, contrary to what popular myth might be, we all know that the creative industries are often places where you work for not very much money. And you know, slog your guts out for nothing or next to nothing. I would always recommend people to keep their record. You have to keep your records for 6 years. HMRC are entitled to ask for those records if they want to. It's a bit silly not to keep them just in case you ever get into that position. And of course, in terms of what you claim for or don't claim for, you must always be in a position where you can stand behind whatever position you're taking. Either be sure about it, or if you're not sure, you can ask me or someone like me, and we'll always help you. But if you've got all your tax returns in on time, if you've paid what you owe on time, if you're earning modest amounts, if there aren't huge fluctuations in what you're earning from year to year, it's actually extremely unlikely. Now, obviously that applies to many, many people, And if you're in that position, it's extremely unlikely that you would face a full inspection. But if you do, here's how to find that. Oh, no, that's all gone horribly wrong. I'll pop that back up. Anyway, while I'm doing that, let's go for questions. How do you want to do this, Izzy? Do you want to people to speak, or do you want people to type?
Yeah, we've got one in the chat, so let's go for that one first, and then if people want to jump in, they can. So the question we've got in the chat is, could you explain VAT registered versus non-VAT registered, please?
Yes, with pleasure. Just hoping to just share that slide just in case anyone wants to note down our contact details. But I mean, even if you don't, we're incredibly easy to find. I hope I don't owe anyone any money, because if I do, they won't have any trouble finding me. Good, yeah, so VAT registration, you are obliged to register for VAT if you are over, if you're turning over more than £85,000 of standard rated supplies in a year. So you don't have any choice once you go over £85,000. If you're underneath £85,000, you can register voluntarily for VAT, but you don't have to. Now, it very much depends on what your trade is and what your business is as to whether that's worth thinking about or not. It's very advantageous for some people. The way that VAT works is that all VAT registered businesses claim it back. It's not a cost to VAT registered businesses. So if your customers are VAT registered businesses, which might be, for example, commercial theatres or commercial producers, or it might be other kinds of businesses. If you supply, for example, training services to other to businesses which are not creative businesses, all those people will be VAT registered, so they won't mind that you're charging VAT. Doesn't make any difference to them. They're going to claim it back. Whereas on your side, you get to claim back all the VAT you're paying on your expenses. So every pencil that you buy suddenly becomes 20% cheaper. Every cost that you have that has VAT on it is 20% cheaper. So it may be worthwhile registering voluntarily, even if you're not, even if it's not compulsory. But once you go over £85,000 of turnover, it's compulsory anyway.
So we've got another question here. I didn't become a freelancer until after April 2021. Am I right in thinking that I don't have to do my tax return until next year?
Yes, so your obligation is to register by the 5th of October in the second tax year of your business. So if you started in May or June or July 2021, you've got until the 5th of October 2022 to register, because you've got until the 31st of January 2023 to fill in your tax return for 21-22. So I would just say don't leave it till the 5th of October 2022, because they are quite slow and it's a bit late to start thinking about it all. So do get round to registering and thinking about it sooner, but you don't have to do it yet. You certainly haven't missed anything yet.
And this is a really good one, actually, because I think this will affect quite a lot of people in the chat. How does it work if most of your income is PAYE and some is freelance, particularly around expenses?
So yeah, a lot of people will be, yeah, as you say, a lot of people will be in this position, and the proportion of people who are in this position obviously went up massively over the last couple of years, because people took PAYE jobs in the summer and autumn of 2020, and in some cases kept them. So if you've been filling in a self-assessment tax return because you were freelance before the pandemic, or you've started doing one now because you've got a new trade, you need to take account of all your income and expenses in your tax return. So your tax return is not just for your self-employment business, it's for all your earned income, which includes your PAYE. So there's another page on it for your PAYE employment. In fact, one page for every PAYE employment that you have, if you have more than one. And you're going to survey all of these things, include them all in your tax return, because they all have a bearing on how much tax you owe and will pay. Now, if you're self-employed and you're claiming expensive, sorry, let me start that sentence in a different way. PAYE employees have very, very little room for maneuver about what expenses they claim. It is possible for PAYE employees to claim expenses. For example, if they have travel expenses that their employer does not reimburse, that's relatively common. Or you may have heard, nowadays everyone knows, because so many people worked at home during the pandemic, everyone knows that you're allowed to have an expense of £312 if you're a PAYE employee for your expenses for working at home, for your electricity and utilities and so on for working at home. So there is a limited scope for doing that, but it is very limited, right? Whereas when you're self-employed, there's much, much more scope. There are very many more expenses that you can include and allow for against your income. Now, you can do all these things really pretty much regardless of how much income you're earning in your self-employment phase. Let me give you an example. If you think about a typical actor during the pandemic, if there is such a thing, that person would probably have got very little income from acting, right? Because there weren't any plays, and yeah, there were a few bits of films and telly and ads, but not very much. So they probably got very little income, but they would have had many of the same expenses that they would normally have in a normal year, because they would still be paying their equity membership and their Spotlight subscription, and they would still have their mobile phone, and they'd still be making self-tapes and sending them off to casting directors, and they'd still be having headshots and making show reels, etc., etc., etc. And all those expenses are still allowable. So if you're producing and you also have a PAYE job, even if 90% of your income is coming from your PAYE job and 10% of your income is coming from your producing or your comedy or your acting or whatever it may be, you can still have, it's still perfectly open to you to rack up all those expenses and put them in your self-employment. You may even be in the position where your self-employment trade makes a loss on paper because your expenses are more than your income. And then you can set that loss off against the tax that you've already paid, PAYE. So you can actually get a refund, reduce the amount of PAYE you've paid because you've made a loss in your self-employment trade. So I hope that gives a general answer, but if there are more specifics, please come back.
So a couple of questions here that are kind of related. So what can I declare of bills, so internet, gas, electricity, phone and rent if I work from home? And also, can I declare my Netflix subscription? I'm half joking.
Don't joke, Grace. Let's take that one first. If you're working in the creative industries, you should be claiming your entire Netflix subscription. You should be claiming everything that you pay for content, anything that you pay for music, any premium TV channels. You can claim the whole lot, basically.
I will say I didn't know this until you were my accountant, and it blew my mind. I could just claim Netflix and my share of Disney Plus and my Spotify.
Well, Izzy, when do you sit down and watch Netflix and think to yourself, I'll now switch off the part of my brain that's a writer. Oh, I will now hear a sentence of dialogue and I will not analyze how good or bad I think that sentence was. It's completely impossible. You claim the whole lot. Grace, I have a slightly more complicated answer to what you said about working from home. So basically, for a freelancer, there are two ways of allowing for your work from home expenses. And there's actually, if you're really interested in this, a blog on our website all about this. You have a straight choice. You can either take this, what's called the simplified expense, which is that same £312 if you're full-time that PAYE employees get. Or if you're self-employed, you can do a more complicated calculation based on the amount of floor space you use in your property and exactly how much all those expenses were, and then you can take a precise proportion of those. And as I say, there's a blog on our website about that explains all that in detail.
Is it better to make voluntary national insurance contributions or not?
100% yes, it is. Great question, Adele. Thank you. Again, many people are in this position because they've earned less than, I think it's £6,500, I'd have to look it up, from their self-employment profits, and therefore they're not charged the compulsory national insurance contribution, but they have a choice as to whether to pay the voluntary one or not. It definitely is worth it. The voluntary national insurance contribution for a self-employed, the voluntary national insurance contribution for a self-employed person is only £159 for the year. Now, I know it may not be that easy to find £159 if you have very low earnings, but what that's doing is it's keeping you in the national insurance system for another year. Once you've got to clock up 35 years in the system in order to be entitled to the full state pension. So that £159 is going to be worth much, much more than £159 to the 70-year-old Adele, who should make the voluntary contribution and then buy us all a drink because she'll be able to afford to at age 70.
That is amazing. I didn't know that at all. That is amazing. Tiago said so I've been working in the UK only since June 2021 and I'm doing a postgraduate degree. Do I have to do a tax return?
So Tiago, it depends on how much you're earning, basically. If you are earning more than £1,000 of income, that's not profit, £1,000 of income from doing creative activities, then you do have to register for then you are self-employed, you do have to register for self-assessment and fill in a tax return. But that would be the only reason I think why you would have to. If you're earning your money PAYE and you're paying all your tax through that job, or if you're living off savings, or if you're living off universal credit or whatever it might be, then no, there's no obligation. It's only for self-employment and for rental income from renting property.
Just to say as well, Tiago's put a really interesting thing in the chat about how taxes work in Portugal and everything is electronic. So yeah, it records invoices directly on an online platform and every business has to provide invoices, which is very cool. So I guess that is a good comparison to our system, which is maybe more complicated than it needs to be.
Also, no capital gains tax for cryptocurrency gains in Portugal. If you're making squillions on your Bitcoin trading, get to Portugal now.
Oh, wow. Okay. Something else new.
You may not be.
Maria said, I use contact lenses mainly for my work. Is it an allowable expense? And she's always, I've always wondered if medicines are an allowable expense.
This is a great question, Maria, and the answer is largely counterintuitive. Certainly for actors, it would be much harder for producers or back of house people. The answer is that the more something is to do with your appearance as an actor, the more likely it is to be allowable. And the more something is to do with your health, the less likely it is to be allowable. So it's counterintuitive and also kind of contrary to natural justice, really, you would think. But there's a very famous tribunal case about a gentleman who, nothing to do with the creative industries, but he was hard of hearing and was trying to claim for his hearing aid. And his argument was, well, I can't do my work without my hearing aid because I've got to be able to use it to hear something. And famously, the tribunal, and I think later the Court of Appeal, did not allow this. The argument being that this is not separable. For a person in that position, one's business activities are not separable from one's personal activities. Whereas if we're talking about an actor wearing contact lenses, we can see that even though it feels much less fair, the argument for allowing that expense is much better. because an actor is known for their appearance, right? They've produced headshots that look a certain way, they've produced a show reel that looks a certain way, and it may well be that their agent and casting directors are saying to them, look, we need you to carry on looking like this. We can't have you wearing glasses on set. We can't have you wearing glasses on stage. We need you to carry on looking like this, and therefore your contact lenses are allowable. So, difficult area. Good question.
Great question from Beck. How much space do you have on your books, and when can I hire you?
Oh, Beck, I didn't even pay you to ask that question. Our door is always open. We're growing. We're very happy to take people at the moment. The time may come where we can't take any more people, but I don't think it will come, actually, because it's not just me, I should say. I'm very ably assisted by Mel, who does bookkeeping, and by Claire, who does admin. So I'm our only fully qualified accountant at the moment, but please, may we have lots more people, and then we'll take on another accountant.
Lots of people in the chat saying they will be emailing you tomorrow. So just prepare for that, John. I've got a good question. We talked a bit about Netflix being an allowable expense that Grace just hadn't thought of or didn't know about. I also didn't when you became my accountant, and I'd never claimed for it before. Are there any other things that people often forget or don't know in the creative industries specifically? People often forget or don't know they can claim for.
Yes, good question. So common things that come up all the time, apart from content, are home broadband is an interesting one to think about, because people don't realise that home broadband is not included in the simplified allowance for working from home. So working from home is supposed to cover your rent, your council tax, your electricity and gas, but not your broadband. Your broadband is separate, so you can have that on top. The use of a car often trips people up as well. That's really common. People often think that they are only allowed to claim for their petrol expenses, fuel expenses. That's not true. When you use your own car for your business, you should take a mileage rate of 45p a mile for the first 10,000 miles, which is way more, obviously, than fuel alone is costing you, which is to compensate you for the other costs of running your car. So that trips people up as well. And then let's just think about subsistence as well, so food and drink. So often food and drink might be being supplied by your engager if you're away, or by the company that's in charge of the work if you're away. But if it's not, and you're away from home and you're buying food and drink out of your own pocket, then you can allow a reasonable subsistence allowance for that, because it's recognised that it's costing you more to feed yourself because you're away, if you're staying in a hotel or whatever. It's costing you more than it would be costing you if you were at home. So that's allowable as well.
Amazing. Thank you so much. This has been so great. Thank you. I'm just going to stop the recording now.